All right. Good evening, everybody. Good afternoon. This is Gary Full. It's November 6th, 2022. And I want to go over the E-mini S&P 15-minute chart. It's really a beauty of Wyckoff. It's such a classical Wyckoff behavioral chart that is pretty amazing. One of the things we look at is a change of behavior, change of character, or change of trend. Well, in this case, we have a market that attempts to spring in the morning, fails, selling comes in, and we're concerned about the buying of the market. Well, we have buying, but it takes about 5 bars to retest one bar. 1, 2, 3, 4, 5. And the 6th bar it tries to. So it takes 6 bars to travel of 1 bar. Weaker wave count, weaker wave. Mark comes down for a secondary test. And it makes a low. This is buying. This is where the CI begins to buy in his shorts. Little buying tail. We don't buy that as Wyckoff students per se, because we know that it's going to tie up money for us. If you want to and sit through it, you can, but it's dangerous because you're buying a lower low and you're not sure that's the low, so it's not recommended that you do that. The market then gets to the point in which it has a secondary test of this area. It begins to rally. We don't have any cause built in the market. We don't have any reason to be long the market until we see some buying in the background. But we start to see some change of behavior here. Market goes secondary test, where it's going to stop most likely is in the area that the market is selling from. Does it perfectly to a T. He has a little bit of shortening of the downward thrust. And now we have a little bit of 4 or 5 bars of going sideways. The risk trend line is drawn, basically just drawn from the lows of the market. We don't have to be exact with those lines. We just want to show some area of how the market overall, trend-wise, ease of movement-wise, rallies, takes 1, 2, 3, 4 bars to retrace 1. That means we're probably going to look for some type of secondary test. This will be the phase A of the Wyckoff, or for the left-hand side, as the market's building cause and building spacing. Mark comes down here, not the supply, but long liquidation. Why? Because the volume is not high enough. The volume is not high enough. Mark comes down. If this was selling, we should go down and make markdown. We don't do that. Mark comes back down, hit a little stops under here, a little buying, and this is the first time that the market held support really on a secondary test. We're beginning to have cause. This cause built, spacing-wise, will give us a move maybe back up to here. With this here. Spring. This is a terminal spring because it makes a new high. Go sideways. This is absorption in the middle of the trading range. So if we get absorption in the trading range where buying is overcoming selling, we can look to buy the spring. The first Wyckoff spring that's acceptable to buy is this bar here. It tries to break on a lighter volume. The better one to buy, or the more secure one to buy, would be after buying comes in to buy the spring on the secondary test. This is your buy edge right here. This is your buy edge right here. This spring after buying, this is your buy. You're stopping on this blue line here. You have absorption, vertical absorption. Demand overtakes supply. Same volume. Jump over the creek, or a lot of people like JAC jump across the creek, or across the creek. We'll do that in reference to Jack. Jump over the creek and vertical markup. This is a classical market. Now, some people want to describe this as a selling climax, preliminary support, selling climax, secondary test, automatic rally, secondary test, and we'll try to label that. I don't think it does you any good into trading it that way, but if it helps you through the theoretical paradigm, go ahead. But you can see it's a beautiful, beautiful chart today. Absorption, the upper third of the range. Spring, absorption, spring, jump over the creek and markup. This is a classical market that has a change of behavior from the standpoint of working lower from weakness, developing its own character after the America opens up here. The low of the day is established on the opening. It works higher, building cost, building spacing, a secondary test, building more spacing, and the right-hand side of the market shows absorption, it shows the spring, it shows perfect Wyckoff and markup. What we're looking for now is a market that goes back to the jump across the creek area, the LPS area, or about halfway back from the high to here. This is our first place we look. Our second place we look, and our third place we look would be the LPS. So this is a wonderful, wonderful chart explaining the absorption, the spring of where to enter the market. Where the safest trade is after the market establishes buying, absorption, you can buy the market here. It's a must-know chart, and it's something that is a very common chart when the standpoint of a market that begins the accumulation process. You see the buying tail, buying tail, buying tail, buying tail, spring, and markup.